How to avoid getting trapped into a price action like this. I'm gonna save you lots of dollars with this video, friends, because I'm gonna reveal my secrets to inducement, liquidity, and order flow, which will allow you to understand this price action, which will teach you how to have more patience during the price action delivery, and how you can actually still get your best trade out of a situation like this. Let's dive into it, guys. First of all, friends, this was the trade that I took on this day. It was a little bit delayed because I missed out on the real movement, and the market actually played a lot with the emotions of the traders while breaking structure to the downside, to the upside, to the downside, to the upside, and so on multiple times. And you had to bring a lot of patience with you, as well as the right understanding to understand that you should not be active trading this situation. Here quickly the proof of my trade, because I don't want to edit this video. This was the long that was taken by myself. You see, this was on a personal account, nothing too crazy. I had very reduced risk. I didn't try now to make millions on this trades or whatsoever. Just want to show you some realistic results that most people can relate to. And yeah, let's just dive into it. Let me just break it down to you on how to do this the right way. So friends, first of all, what you have to understand about each trading idea that I have for the day is I start with the higher time frame. Nothing is done on the lower time frame alone, as I think personally the lower time frame is more than likely manipulation only. But we can use this manipulation in our side to understand when most of the traders eventually get stopped out. Because this is the nature of the market, right? How many traders do you know who are profitable? Probably most of them who attended the market have lost money to the market. Was it every day? No. The cool thing is that even very unexperienced traders might have sometimes a good moment, right? Like where they call a big move or whatsoever. Because at the end, there is very often just a small sweet spot which will make you profitable and which is gonna like make you terrible unprofitable. But those small things that you have to implement in reality take sometimes years in order to develop the right way. Also for me, it was the case. In order for me to really understand risk management, risk reward, win rate, psychology, it was a very hard way. And most people try to skip that. So they try to like search for the cheat code, but there is no such. The only cheat code is education. This is why I'm providing you here free knowledge for everyone to understand how this thing actually works. But you have to put this entire thing into practice and collect your own data with it. Otherwise, it's going to get very, very terrible and very, very, hard at the end. This is why I have a mentorship program where I teach this entire thing every single day by sharing forecasts, by explaining them every price action at the end of the day, and also forecasting everything. And you will see how accurate our win rate is in terms of understanding what the market is supposed to do. So let's just go over it and let's just understand. So I just mentioned it that we do everything on the higher time frame first. So if we have a look quickly on what the market did, or let me just delete everything from here because it's not relevant, so you can better understand the entire PA. So let me copy this so I can show you specifically the entry and the stop loss. So this is also what I do with my students every single time. I send them a forecast while I'm analyzing this entire thing as a quick Loom video, or we do this in live trading sessions, or we do this live on Zoom calls, whatever. And we've been even live at that day, and I explained to them that we had a very bullish perspective to it. The reason for that was, as you can see, Asia moved very much to the upside, kind of heading the trend for the day, but of course this can reverse every single time. Still, what I liked was that the price took out a form of internal liquidity over here, had a reaction to it, took it one more time, and then it started to move up in the London session. So for me, it was very clear. I was looking to buy in the New York session, but I expected it to happen a little bit later. I was expecting in reality that the price will do some form of manipulation. So my idea basically in the higher time frame was just the order flow continuation. So all what you see here with this higher highs and higher lows is in reality a bullish order flow. And I was expecting price to run above Asia high, eventually then to make a pullback and then a continuation. Exactly what price did at the end, as you will see. But I was not expecting it that it's gonna happen very, very fast. So if we're right now on the M1 time frame, and yeah, we've been waiting, I've explained them a few examples from the past to teach them specifically how we took the previous trades and how to take future trades and so on, the market started to manipulate price, right? Like, this is a manipulation. Most people will say, why is this a manipulation? Well, because price broke structure to the upside and it's not moving in the bullish direction. What it does is it takes out a form of liquidity, which will be used in order to continue the bullish narrative, right? And we have to check out when the price is really moving right now up higher, because what price can do in situations like this is it can just drop lower and lower before finally moving up higher. So we didn't have enough reference points for this example. This is also why I was expecting the real movement to happen later on. So for me personally, I wanted to see more data, right? People usually, when you are in the New York session, they tend to like, all right, I need a trade right now, which is probably the worst thing you can do. You should, of course, perceive every situation, every possibility you see in the market, but not every single one is an A+ setup. If you trade too many trades, eventually you will fail because you will actually trade C setups, something that you should never touch, right? And it looks like an A+ setup at the beginning, but with time you will realize, all right, what you've done was actually wrong because your emotions didn't let you have more patience. And patience is probably the most important thing. This is what I brought with me the entire day. And you will see it's a foundation for the entire idea at the end, just having patience. Because price just chilled around over here, and I was expecting, all right, the movement will come later on. While I was in the Zoom call, price started to move like this. So I knew it's over, right? Like, I cannot take the trade now. Luckily to me, the market will not always provide you just one single setup for the day. I was hoping for another opportunity. And yes, hoping, because I never know if the market will really provide me something which fits in my rules. So I've seen the price moving up higher, and I've seen already the potential the price will create over here a fair value gap in order to come into it and test it. But as you can see, price just moved higher, and I didn't hop on this train, which would have been a possibility, but I considered this to be too risky. Because I didn't call the bottom, and any manipulation can take place every single time. So I prefer to wait. And as you can see, the market starts now with the first form of inducement, which means the price breaks structure to the downside. And now the expectation is that the market is reversing, right? Like you see here a break and so on, multiple breaks. People will assume that the price will now drop lower, right? Eventually tapping into something like this or whatsoever. And as you can see, the price moves higher, takes out the high. So this is now, again, a break in structure to the upside for the bullish direction. And the price continues that, right? Another push up. So now we can argue about that. Wasn't there a nice opportunity to like buy the market? And from my point of view, no. I was still waiting because now I've seen that on the 1 hour time frame, the market has formed another great trading idea for me. And the trading idea that I was hoping for was basically to see that the price will tap into this order block. So I've seen this order block over here. We have here a form of internal liquidity. So both of these can be potential POIs in order to like trade away from it. And as I've seen this, I was like, okay, this is in alignment with my 1 minute fair value gap that I have over here. So it means that if the price taps into one of these, we have a very high chance that it's going to drop all the way down to my lower time frame fair value gap. So that's exactly what I was hoping for in order for price to come. So I've set my alerts. I didn't check the price like the entire time, just set up my alerts to see in case that the price really moves down lower, I get a trigger, right? Because I don't want to like be a victim to the, or a slave to the charts and just analyzing the entire day. No, I'll wait for the opportunity to come in my way. And if the price now will shoot up for whatever reason, I'm done. I will miss out on this opportunity. I will accept it and I will trade the next one. And that's it. So what we can see over here, price is inducing traders multiple times with another push up higher and then with a rapid change in structure. So people who believe it's going to go up they couldn't get any sort of movement. In reality, the price always moved exactly the opposite way. And then I've been waiting for this opportunity right over here. I've seen it tap into it. And now all you want to see is actually that the price is moving in your direction. Most people will say, cool, you're looking right now for a break in structure, something like this. So for me, basically this level right up here. And the thing is, if you would do this that way, you will probably miss out on many trades. For me, what I want to see is the current momentum. That the current momentum is following my idea. Once I've seen that this was the case, right? Because as you can see now, price is moving higher and breaks some structure over here. I was ready to place my trade, right? And that was the case right over here. Entered the trade. You see very big bullish momentum. And the price just followed it perfectly. So the way and how I did it was a little bit different, sorry. Here, specifically here, when I seen the price move higher, I entered, stopped below the low, and TP above the high. A little bit higher because I know I can expect price to always go slightly above it, and that's it. That fast, my trade was over. I didn't need to wait for a break in structure because that would need for me, hey, I need an additional stop loss size, which will reduce my risk reward dramatically. I've used a 1 to 2. Perfectly exit at the top, stop loss below the low, right? I don't need to protect all the way here. This is more than enough. And that way I protect my idea the best way possible. I get the best possible RR. I was not induced by this crazy PA on manipulation where most people didn't know what to do. It's a market phase you should avoid at all costs. And in reality, it was an accumulation phase. This was a manipulation phase. And this was a distribution phase. That way, you can trade every single time the market is the right way by understanding on what phases you are and when you need to be active and by following the higher time frame. If you want to get access to our mentorship, free trial is in the link in bio. See you guys.